Welcome back. You're with us on our Mahurat session, and it's been quite a run-up to Diwali this year, and again in today's session, touching that intraday record on the Sensex as well. Ambareesh Baliga is joining us this evening, Managing Partner, Global Wealth Management at Edelweiss. Ambareesh, what a fantastic week it's been for the equity markets. How have things been for you? Are you as excited about the rally as everybody seems to be, even going ahead?
First of all, wish all of you a very happy Diwali and to all your viewers, and I hope we have a prosperous year ahead. Yes, I'm quite excited the way the markets are, no doubt, but then it has to be a broad-based one for most of the investors to return back into the markets, those who had left the markets in the last 4 or 5 years. So that's exactly what we see happening over the next couple of months, hopefully over the next 3 to 4 months. You should actually see the rally being more broad-based. Sectors which had not performed in the last couple of years, you'll see them bouncing back, especially engineering, capital goods, infrastructure. Some of these PSU banks we have seen starting to move up. I think that's one sector which will also participate. So I think you'll see the rally more broad-based going ahead.
Ambareesh, how confident are you as well of us sustaining these levels? Of course, participation is one thing, but even when it comes to the headline indices, given the fundamentals at the moment and given how they've actually run up, how confident are you that we'll actually sustain these levels over the next few months or weeks?
The way things are, looking at the mood on the street and especially with the sort of a liquidity which is flowing in from the FIIs, I expect this broad-based rally to continue for a while longer. But yes, what you're saying is also true to a certain extent, that there's a major contrast between what is really the ground level situation, the business situation at the ground level, and what is happening in the markets. But then people are quite hopeful that we should see some green shoots in the economy over the next few months, which I think will actually aid the rally going ahead.
So Ambareesh, on the back of what we've been discussing out there, any stocks that are on the radar right now as we approach this new year, as we go into this period? Because clearly the last couple of months or weeks has all been about the IT, the pharma and the FMCG pack. Will we probably be looking at some stocks that haven't really managed to perform in this rally that could now get some exuberance or some outperformance coming in? How are you positioned over this next 1 year?
In fact, over the next couple of months, we actually see some of the auto ancillaries, some of the banks which had not really performed well in the recent past. They should start performing. Among the auto ancillaries, clearly we are looking at Motherson Sumi, which has anyway performed extremely well. Financial performance has been extremely good over the last so many years. Even the last quarter results were better than expected. So we are asking people to buy at the current levels. In fact, we are looking at a level of about 410, 420 for this stock on a come bonus sort of a price. The other stock which we are looking at is Bharat Forge, where again we see the international auto market improving going ahead, and a stock like Bharat Forge should move to levels of about 350 to 370. Among the private sector banks, we are looking at a small bank called DCB, where again we have seen extremely good performance, financial performance over the last 8 to 10 quarters, and it has just about crossed levels of about 50. In fact, we are looking at a target price of about 68, 70 for this stock.
Yeah, since you touched upon the banking space, that's really been the key surprise. Just pull up a couple of the banking names today as well. It's going to be some, you on lower volumes, you still got some interest coming in. Indian banks trading higher. You got a couple of the banking, mid-cap banking counters that are also trading on a little bit of a firm note. Ambareesh, what's the sense here? There was a lot of pessimism coming in before the earnings season actually kick-started. That banking is really going to be one of the pockets to watch out for. There were a lot of concerns coming in as to what kind of numbers they would actually be posting. Has that abated to a certain extent? Has that faded away now? What's the call on the banking sector as a whole right now?
No, the concern is still there as far as the PSU banking space is concerned. Although the results which we saw were much better than what we had expected, the provisioning is lower than what we had expected. But I think one should wait for the December quarter results to really change the stance on the PSU space. But nonetheless, looking at the mood on the street, I think these PSU banks will still rally further from these levels. I mean, it's like very much possible we could see another 10-15% sort of a rally. Some of the stocks we have actually seen moving up 30% in the last 2 to 3 days. So I think that could continue for a while longer.
All right, Ambareesh, just hold that thought. We need a quick break right now, but when we come back, we continue discussing sectors and stocks with Ambareesh Baliga. Stay tuned.
Welcome back. You're with us here on our special Mahurat session. Markets are looking good this evening and heading into the new year with a bang. Ambareesh Baliga is joining us as well with his take on things. Ambareesh, we've been discussing, of course, how sentiment has improved and how things are looking good at this point. Let me also just flip this around and ask you if there are any pockets of stocks in the market you'd actually suggest perhaps getting out of at this point, because we've actually seen some of the heavyweights run up quite substantially over the last few weeks.
No, I didn't get your question very clearly. Can you just repeat it, Abha?
Absolutely. Ambareesh, I was asking you if there are any pockets of specific stocks, particularly the heavyweights, that you would actually recommend perhaps booking profits in at this point, given the extent to which they've run up.
I think FMCG space is one space where I think one should book out to a certain extent, especially HUL, where again, if you're talking about the last few days, the performance hasn't been too great. And clearly we see sectoral rotation happening going ahead. If this rally has to continue for the next 2 or 3 months, you will see the sectors which have not performed too well in the recent past, I think they will start performing. So I think it's time possibly to book out to a certain extent from IT, FMCG and pharma stocks and get into capital goods, metals and the banking space.
All right, certain areas there that Ambareesh is quite bullish on at this point of time. Ambareesh, what are the kind of levels then you're looking forward to now going ahead? Give us a range, give us an idea. We've already gone up about close to 15% since last Diwali. What can we anticipate going ahead? Just, go out there on a limb and give us a sense. Yeah.
No, in fact, I don't see the index really shooting up much more from here. I don't see the index moving up either 10-15% from here. I think Nifty could move up to levels of about 6450, 6500 levels. But then you'll actually see the mid cap and the small cap index moving much better than the broader index, and you'll have the specific stocks giving you extremely good returns. So I think one needs to start looking at stock specific and the ones with extremely good fundamentals to start investing in. I think this is a time people will again start to look at value instead of just chasing stocks where there was momentum in the past.
So then, Ambareesh, that's really the key point, because the participation that we've seen over the last couple of months or so, rather last couple of years, retail hasn't really been there in this kind of a market, though the markets have actually run up back and created new life highs for themselves. So going forward into this new year, looking at Samvat 2070 itself, what's your strategy? What would you advise investors to now do?
I would say that look at investing in the markets over the next 3 or 4 months. That's when we actually see that momentum and the sort of a pre-election rally, which again I've been talking for quite a while, that if you see the last 20 years, we have seen pre-election rally, starting about 5 or 6 months before the elections, and I think this is what we'll be witnessing now. But I think, because of the elections, I don't think one should really look at investing for the next 12 months. Look at investing for the next 4 or 5 months, possibly book out to a certain extent before the elections, because you really don't know finally as to what is going to happen in the elections, which is the party which will come back to power, whether it will be a stable government or not. So once the elections are over, possibly I think one should take a fresh view. So I really can't give you a view from this Diwali to next Diwali. My view is for the next 4 to 6 months, invest now and possibly look at exiting in the, like in the sort of a rally which we could see in the next couple of months.
All right, Ambareesh, when you said, of course, you're expecting this to become a more broad-based rally now, you're expecting more participation going ahead as sentiment improves. Give us also a sense of, in the broader markets, in the mid-cap space, some of the stocks or, again, sectors that you are bullish on at this point for the next 4 to 5 months.
In fact, I mean, I would look at auto ancillaries. I would look at metals. In fact, I would look at some of the, I mean, private sector banks, and also including the smaller PSU banks, where I think you could see a decent rally. So basically, it's these couple of sectors which have not really performed too well in the recent past, and I would surely add engineering, capital goods, and infrastructure to that.
All right, plenty of things that Ambareesh is looking at right now. Ambareesh, also in terms of the macroeconomic environment, in terms of what we're seeing on the currency, are you expecting the situation to improve over the next couple of quarters?
In fact, the way the currency has moved in the recent past, and especially with the way the FCNR deposits are coming in, and clearly the gold imports have come down. I suppose the currency should be in a range. I don't see it really going beyond 63. So I think it would be in a range of 60 to 63. So I don't think currency will be a major worry for the markets going ahead. Even the CAD, since it's under control, I think only inflation is going to be an issue still. And unless that comes under control, I think that could be one of the worry points for the markets going ahead. But yes, like we were talking earlier, there is a major contrast right now between the ground level situation. I mean, if you talk to the retailers, the smaller businessmen, I think the situation is still quite pathetic at the ground level. And we're just hopeful that over the next few months that we start seeing green shoots, and that should help the rally continue.
Ambareesh, thank you so much for joining us and chatting with us today. We wish you a very happy Diwali and a great year going ahead. Thank you so much for being with us. We're just a minute or so away from closing this Mahurat session. Let's go across to